3 months ago, I was given one of the largest amount of money to build a portfolio and manage it from this video, which I've already deposited. And on Monday, date 8, I'll be putting every shillings into work. And most of you guys have been asking me, where did the portfolio go, or how is the portfolio been doing? So I'm here to show how it has been performing. So on our portfolio, we had deposited 27 million, but because of the brokerage fees and all other charges, we were able to invest 26.5 million. And we grouped them according to these 6 companies. So we had KSh General, Equity Bank, I&M Bank, KPLC, Safaricom, and Sanlam Kenya. So we can see that our portfolio has already created a 42% growth over the 3 months. Remember, this portfolio is only 3 months old, and we have already been able to generate 42.9%, which is close to 43%, and generating 11.3 million in capital gains, which is extremely good. And out of this, I've not yet calculated the dividends, because some of these companies have paid dividend while we are still holding the shares. So we have also been paid dividends, which we did not invest, but yes, it has generated a good money. So let's take a breakdown of what we did and how we came up with it. So I'll create another video explaining step by step on how I do evaluations of a company, so that I can know which companies I should invest in. I'll be creating this video by probably before the end of next week. So let's get into more details. We have the first company, which is KSh General, which has given us a good return. The initial investment was 16.98%. Currently, the total investment currently, inclusive of the profits, it's at close to 26. It's at 25.95 allowed there, 9495, which is a good return. It has given us crazy return. So it has given us a return of 5.3 million alone. And this company itself gave a growth of 118% growth alone. So we have the next company, which is Equity Bank. It has done as good as well. And then we have I&M, extremely perfect. And then we have KPLC doing very well, Safaricom. We can say all the companies are doing well, which is an excellent thing. So when we compare the companies, we can say all of them are very good and quality companies. But the reason of doing this assessment is, remember, we are doing this assessment after all the review again after 3 months. Yes, I've been working with it because I'm the one managing it. I've been with it, but after every 3 months, I'm also willing to do a good review, deep analysis for each and every company, so that I can know, should I continue holding this company? Should I add more amount on this company, or should I sell some portion of these companies? That's why I said I'll be releasing a video explaining how I do analysis of each company to consider buying, because most of these companies is companies that I bought while other people were not thinking of them. They were thinking of other companies, I can say, by that time, 3 months ago. You can calculate and see when it was. Or you can view my previous video that I created about this portfolio. Let's continue. So if you can see, the other thing that is diversification. When you look at the diversification that has been placed over here, we have 6 companies and 5 sectors across this one. We have insurance sector, we have telecommunication sector, we have energy sector, we have banking sector, and we have the cars sector. So we have 5 sectors across 6 companies that we have on this portfolio, which means the diversification is extremely good. And you can see that each sector brings different results to the portfolio. It comes with each sector makes money differently from any other sector. So that's why we have different sector to get that balance in the market, because each sector brings in money differently. And when we mean by diversification, it's not diversifying across one sector. Like you take bank sector and you buy 5 banks from the same sector. That is not diversification. That's concentration. Diversification is when you buy companies from different sectors at a good percentage. Because if we look at what I bought and the percentages that I placed on, there was no company that was above 18%. All companies were in between 11% to 18%. That is trying to make every sector have equal capacity. And that's what we call diversification. So as I said before, the purpose of this portfolio review was to check the growth of the companies, how they have grown, which company needs to be reduced, which company needs to be added, and which company needs to be eliminated from this portfolio, and analyze if there is other companies outside this portfolio that has a potential of moving high or gaining very quickly within a short period of time, and people haven't realized about them. Because the best thing is usually like this: when you notice something on a company that people haven't realized about it, it creates that momentum of you being profitable very quick. So that's such a thing that we're gonna be looking. Something like Sanlam. It's something I'm considering. I'm on a look of it because on date 13, I believe on 13th, they are doing the half-year report, which will be meaning very much based on how this portfolio will be performing specifically on that sector. So it will determine a lot if we will still keep on holding the company or we will eliminate the company completely from the sector, among others. So the client's goal was long-term wealth accumulation with a blend of capital appreciation and dividends income companies, but with a bias towards capital growth. That's why you see I made specific companies entry, which has resulted to a growth of 42% within 3 months. Selecting specific companies that aligns with you, it's very good. So what I will do is I want you to assume this portfolio was yours and you are given to manage. Which companies would you eliminate or which companies would you include in this portfolio, given that you should not exceed 7 companies? I would happy to see what you're gonna give or what you'll be commenting over there. I'll be explaining each comment that will be giving precise guidelines of whether it matches client's goal with this portfolio or it doesn't match. So you can give it a shot and I'll be taking that opportunity to reply to each and every comment that you will give to see how you're gonna achieve such a thing. Stay guided usually offers portfolio review, portfolio management, portfolio build up, and you can grab an ebook if you are a beginner and get a more knowledge about shares and how it goes like. But if you feel reading ebook is so stressful, you can just give me a call. My number is usually on the bio. We can have a consultation with just a cup of tea. It can be online or physical, and we see how it goes. Feel free to comment and reach out. Have a good one.